Welcome to the Market Huddle with Patrick the Content Machine Ceresna and Kevin the Macro Tourist Muir. So grab a drink, get comfortable, and get ready for a deep dive into the markets. Take it away, guys.
July 12th, 2019, episode 36. I'm Patrick Ceresna.
And I'm Kevin Muir. Thanks for joining us this week. Today we are joined by Alex Manzara to talk Japan and Eurodollar spreads. Alex will then share a trading tale, and for our WTF, we go to the banana stand.
And this week in trading history, we go back to the 80s to look at the MBS strips, and then we're going to look at the top 5 things to watch next week. So before we start, though, Kev.
Yeah, July 21st, the big smackdown.
The big smackdown. But actually, I'm more looking, while listen, of course, we're going to do our very best to shame each other on stage. But but it's really the going out for beers with our listeners that I'm looking forward to at the Public House, right?
That's right. So July 21st, we're actually appearing at the Traders Expo. We're going to be speaking at 10:30. We're going to have our big bull bear debate, and then after that, if I can get it out, we're going to actually head out to the Public House. We'll be starting at 2 o'clock, and the Public House is at 400 North State Street, and we're going to be going till you tap out, Patrick. Which
is at least an hour.
That's right. No, but seriously, make sure that if you're willing to, we're going to be staying there for dinner. We're going to stay, and just so everyone knows, there's no cost. Now, someone implied that somehow we were able to get free beer and that no cost meant that you could drink for free. No, there's going to be no cost in that there's no cover, or we're not trying to make any money off of it, but we are going to be going and running up quite the barbell, so you'll have to pay for your own beer, but it's a shame because you keep insulting all the sponsors, Patrick. Otherwise, we might have been able to get some free beer. But anyways, make sure
let's go on.
If you're in Chicago, make sure you come by. We'd love to see you.
And anyway, don't be shy, even if you're not in the investment business. If you like the show and just want to say hello, don't be shy and come out. Anyway, Lena.
Yes.
Who's our sponsor this week?
This week we're sponsored by Black Oak Brewing Company's Love Fuzz Red Ale.
Nice.
So our Love Fuzz Red Ale is triple hopped using Legacy, Simcoe, and Galaxy hops to create a very subtle blueberry, citrus, and pine notes that complement its natural malty caramel flavors. Inspired by the love of craft brewing and great music, all of us here at Black Oak Brewing Company invite you to savor this Canadian Brewing Awards gold medal winning ale.
Gold. Wow.
Okay, here we go.
All right, let's find out what we got. Yeah, it's delicious.
Actually, I like this one.
Really good.
So, and you know, Lena, what we're going to do, I didn't know if I spoke to you about this, but Patrick and I have decided that we are going to rate the beers.
Oh, right.
So if you're interested in sticking around at the end of the show in the after hours, we're all going to give our, 0 to 10 rating on each beer.
Oh, I already know what rate I'm going to give this beer.
Okay, well, don't spoil it. Just wait till the end.
Yeah, don't spoil. You know what? You might feel differently after you have 4 or 5.
Yeah, well, we should have another scoring of whether it's sessionable or not.
Oh,
that's right.
Or crushable.
Because it could be a really good beer, but it doesn't really count as being very sessionable.
That's
so
right.
We should.
My only question is, on the sours, are we allowed to go negative like German Boon rates?
Speaking of scores, guys, did you see the Twitter poll for you guys' Chicago Traders Expo?
Where are we at, Lena?
Right now, Kevin's actually leading at 55% of the voters.
That's not good.
No,
that's not good. I wanted to be the underdog. Please vote for Patrick.
You know what? It's very hard for a certain number of people to be bullish bonds, right? And so it's gonna be hard for people to come onto my side, right?
I think it's just that they all are feeling sorry for me because you're always so mean to me, Patrick. Okay, listen, I'm going to do my legal stuff here so we can go. Clients and employees of East West Investment Management may hold positions in securities mentioned in this podcast. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. For more information, please visit eastwestfunds.com. Side effects of too much market huddle may include an altered state of consciousness, distorted perceptions of time and space, impaired coordination, and negative experiences such as anxiousness, panic, self-consciousness, and paranoid thoughts.
All right. I'm not going to even say anything. Let's just go on. All right.
Okay, at this point, we get to a special treat. We're joined by Alex Manzara, my favorite Eurodollar option trader, or actually broker, the fellow that I always turn to whenever I have questions about what's going on with the Eurodollar market. Thanks for joining us today, Alex.
Well, thank you guys for having me. It's a pleasure to be here.
Yeah. So we start with this picture of you. This is you. I guess that's not yesterday, Alex. That's a few years back.
No, this picture is from the before the turn of the century, as a matter of fact, in the late 1990s. And this was when I was a broker for Commerzbank at the Chicago Mercantile Exchange. And that is right in front of the Eurodollar pit.
Yeah, so you're an old school kind of Chicago trader, and you watch, and I love your insights that you give in your blog, Chart Point. And I was just wondering what's on your mind. Like, what do you got prepared for us today?
So the thing that I wanted to start with is the first picture here is I was thinking a lot about when Trump was saying that the U.S. might match the manipulation of China and of Europe. And so this first chart, and in terms of FX manipulation, and so this first chart shows in the amber the dollar yen, which from 2012 to 2015 went from 80 to 125. It should have been a huge boost for Japan, right? And if you can see the upper, the amber arrow shows the depreciation. The white line shows the inflation rate in Japan. And so at first, the yen depreciation worked. It inflated Japan. But the green line is the GDP. And that never really got above 1%. So this idea that depreciation is going to solve the problems of central banks in terms of trying to get inflation higher doesn't really seem to work. If you go to the next slide, I'll just kind of quickly go over this. The central banks have sort of, been on the same topic for a long time. This is from a talk that Kuroda gave in 2013 to the Kansas City Fed, and you can see that he was talking about a high natural rate and saying that we're trying to get inflation up, and of course, it didn't really work. And this is from 2013, and so it's been the same central bank song and dance for a long time. On the next slide, if you can advance. So on the next slide, we have Brainerd from September of last year, who sort of said the same types of things, talking about the natural rate. But what was interesting here is that she said as the Fed was raising rates, the natural rate actually, or the neutral rate actually went up as well. So this was something that indicated really that maybe the Trump stimulus of late 2017 and early 2018 was working. And of course, the Fed was also tightening at this time. So this was, but again, it's been the same topic out of the central banks for a long time. And if you can just advance then once more. So that's essentially it in terms of the central banks. But this is the recent history right here, and this I just want to talk about sort of how the futures markets depict what the sense of odds are for Fed easing or for Fed tightening, etc. This specific picture that we're looking at here is the July to August Fed funds spread. You can see that in late May to early June, as this spread declined, it indicates that the August contract was much higher than the May contract. So this spread went all the way from around 0 or around -5 basis points all the way down to -34. So -34, what does that mean? it means at that point, and there's a FOMC meeting at the end of July. So, are guests familiar with how the Fed funds contracts work, do you think?
Well, why don't you Why don't you just kind of go over it so everybody is? Like, I think
Okay.
Patrick and I know, but not everybody is. So why don't you just walk us through it?
Okay, so the Fed fund contracts is the average of the Fed effective rate of the Fed funds over the contract month. So in this case, it's a very easy spread because there's an FOMC meeting right at the end of July, on July 31. So whatever the Fed does at that meeting will completely affect the August contract. In other words, if the Fed were to ease by 25 basis points, then the August contract would theoretically be 25 basis points higher in price than the July contract.
Right, and I think that everyone should kind of understand the difference on the Fed funds versus the Eurodollars. The Eurodollar is the settlement into the 3-month LIBOR rate at that time, and it doesn't average over any period. It's an actual, like, it's the setting on that day. So that is kind of it's a big difference, right, between those two contracts?
Well, it's a very big difference, and if you're looking specifically at what is priced in to the market for the Fed specifically, the Fed funds are a much cleaner way to do it because there's a spread between Fed funds that the Fed really, that's the rate that they control, to LIBOR. Sometimes the LIBOR OIS, it's kind of a credit spread, right? So that spread can widen or narrow, right?
That's right. And the other thing that you mentioned is that you said something about the effect of the effective Fed funds, which is different than the target. And why don't you explain to people how, like, even though the target might be, 2.25, the effective might run 2.12 or something, and how it might be a little bit different?
Well, the Fed effective rate is I think it's a weighted average of the actual amount of Fed funds traded between banks. And that rate is computed daily, and it comes out the very next day. The Fed fund target currently is a quarter basis point wide between 2.25% and 2.5%. But the interest on excess reserves, i.e. OR, is 2.40. So we essentially figure that the Fed effective rate is going to be right around IEOR, in other words, 2.40%. In the last couple of days, it's been a little bit higher. That indicates to some extent that there's a little bit of a funding crunch. This is why the Fed a couple of times has tweaked this interest on excess reserves at the meeting in order to try to keep the Fed funds rate within target.
Right. But when people go look at the Fed funds futures, they should just be aware that is based upon the effective and not
on the average of the effective, right, and not on the target specifically.
That's right. Yeah.
Right. So the previous chart shows that the market at one point was showing at negative 34.5. There were fears that the Fed might ease 50, and now it's come back to around 25 basis points, 28 basis points. So the market now is pretty convinced that there's going to be 25 basis point ease, and that's that. Now, if you move to the next chart, because this does show Eurodollar 1-year calendar spreads in the next couple of slides, and these are longer-term charts, you know that the last easing cycle was from the middle of 2004 to the middle of 2006. This lower panel of the chart, and this is the first Eurodollar contract to the 5th Eurodollar contract. So that's a 1-year calendar spread. The lower panel of the chart shows the spread. So in the green parts of this chart, the spread is positive. In other words, the nearer contract is at a lower rate than the farther contract. That would be a positive yield curve. You can see that as the Fed is starting to, this was a tightening episode. As the Fed starts to tighten in the middle of 2006, the spread goes negative. It goes red. And that indicates that the Fed is tight. So this spread, the first to the fifth contract, got as low as negative 158 basis points. In a very rough way, you can sort of say, well, the market was expecting, a total of 3 ease, or a total of 150 basis points of ease within a year at the very low of this spread. So
Right.
so these spreads that give a very rough indication of timing and magnitude of what the market feels like the central bank might have to ease. When these spreads invert, when they go negative, and there's been a lot of talk about the Treasury curve longer term going negative, but these short-term Eurodollar spreads also give a lot of indication of what the market's perception is in terms of the central bank being easy or tight. And when it goes red, kind of indicates that the Fed is tight, or the central bank is tight, and that they're going to have to ease. So the current SEP spread, which is currently the first to the fifth contract, is around negative 41 basis points. That would indicate that the market thinks, well, there's 1 or 2 eases between September of this coming year and September of next year. Of course, we've already determined that we think there's going to be a 25 basis point cut already at the end of July. So go ahead. Did you want to insert something else?
No. Sorry, no. You
Okay.
keep going.
No,
Sorry
not at
to
all.
interrupt.
So what I've done then I've also just included the second to the sixth contract on a rolling basis, and then the third to the seventh. And what you can see is that as you get further out the curve, the spreads are less and less negative. In other words, the market kind of thinks the easing is going to be front-loaded. It's going to happen, and then it's going to stop. And of course, when you've got rates as low as they are, 2.25% to 2.4%, wherever, it makes a lot of sense, right? You're going to get down to the zero effective bound anyway. So that's just sort of an indication there. You'll note that in this cycle, all the Eurodollar spreads, or the first 3 one-year calendars, went negative at the end of the year when stocks were getting slammed, and they never really came back to positive since then. Even though we had even though the Fed changed, even though we had a big rally in the stocks, these spreads remained negative. So it was always an indication that the Fed is tight, the Fed's going to have to ease.
So Alex, can I interrupt there for you? It's Kevin.
Sure.
So I had a question for you. It felt to me like that the market bullied the Fed into this kind of, I don't know if I want to use the word desire, or almost forced the Fed to go and price in a lot of easing. And when I look at these charts, it actually very quickly becomes clear to me that it actually wasn't that dramatic. And if we go back to your first chart, we can see from the 1 to 5 kind of spread that it was actually it was actually much more. They bullied the market, the Fed, a lot more in 2007 than they are currently.
Well, sure, that's the case, but think of where rates were in 2007. We are, by the end of the tightening cycle in the middle of 2006, we were at 5.25%. So there's a lot more
room. I got it.
Exactly.
So do you feel like, to me, were you surprised at this last market reaction at how quickly they priced in the number of eases that they did? Like it felt to me like that the market quickly determined that a recession was imminent, and that the Fed had kind of fallen behind, and that they had to do a lot of easing. And I was shocked at how quickly the market priced in a lot of cuts without actual confirmation in the data. you trade this all the time. You've been through probably more. You've sat and stared at the Eurodollar futures a lot more than me. Do you feel like that was normal for this market, or do you feel that it was unusual?
No, I feel that it was completely abnormal, given that we have full employment, given that we have stocks near all-time highs. And not only that, we had a lot of Fed officials saying, hey, look, the economy is pretty good. In fact, I will tell you that, and I don't have anything reflecting this in the slides, but if you, the Eurodollar skew became extreme. A bid for calls out of the money, equidistant out of the money calls versus puts. The calls were extraordinarily well bid compared to the puts. And what was the reason for that? The reason was, well, look, we've got China problems, we've got global trade problems, we've got Brexit, etc. So the calls were, and on the downside for the puts, market's saying, look, there's no way the Fed's going to tighten. What I will say, though, is that blew up a lot of, blew out several Eurodollar option groups, because that's essentially what they trade. And so this move was actually quite extraordinary. It's come back to where it's more reasonable, but I will say that, it was definitely an abnormal move, and it blew a few people out.
So it wasn't just me thinking that this is that the bond bulls had gotten way ahead of themselves. You're saying that, like, compared to what the fundamentals were showing, these were kind of abnormal moves for the Eurodollars in terms of the amount of easings that had been priced in. Now, do you think it was guys getting caught short gamma and that they were the ones pushing it, or do you feel like it was something else? Like, do you think it's a kind of maybe the new environment we're in with too many hedge funds chasing the limited alpha, and then it just kind of feeds upon itself?
I think more the former than the latter, but I think it's a combination of those things. Sort of a sea change in the perception of what may occur in the future, and there were certainly a couple of large hedge funds that definitely pushed the position and pushed it with a very big size. In terms of Eurodollar call spreads, calls versus puts.
Because I was shocked I saw guys getting on financial TV, and I'm not just talking CNBC, I'm talking about like more sophisticated venues, and talking about how they were going to get 3-4, cuts in the next year, and that they could see zero by next year, batshit crazy stuff, like end of the world kind of things. Dogs and cats living together. That's what I saw. And it just seems to me that they kind of lathered everyone up into thinking that this was going to happen. And I was just like, whoa, let's wait. I'm not saying it can't happen, but you're now pricing in almost that surety. And I was shocked at how quickly it went. And I'm glad to hear that you also think that this was an abnormal move.
Well, and it was accentuated by people having to cover bad positions. There's no question about it. I'll give you a small example. In the very beginning of June, for example, you take the December 9 contract. On the 3rd of June, it settled at 98.04. The 98.50 calls, so 46 out of the money, settled at 7.5. The 97.50 puts, which are 54 out of the money, settled at 3.5. So nearly equidistant. The calls, 98.50 calls, so that's a 1.5% strike, settled at 7.5%, and the 2.5 strike, when the Fed has not even eased yet, only 3.5 basis points. That was a fair amount of skew. Now, if you look at it, from a couple of days ago, from July 10th, the contract settled at 98.01.5. The 98.50 call settled at 3.25, and the 97.50 put at 3/4. So instead of the call being 4 over, and yes, there's a little bit of delta there, but instead of being 4 over, it's now only 2.5 over. Still, there's a bias to the upside, but it lessened after a lot of people blew out. And you can also see it, and it makes sense in terms of the way some of these one-year calendars traded. So, for example, I think SEP, or the first to fifth contract, I think I mentioned, got down to something like negative 58, and now it's negative 40. So
Right.
they took out a little bit of the easing expectation as well over the forward period.
So I have a question for you, Alex, in terms of the skew. Now,
Yeah.
if you think about the stock market, like the stock market obviously gaps to the downside, so therefore it makes sense that it trades with like a crooked smile, with the out of the money puts trading higher because the volatility to the downside is higher. Now, you might argue on Eurodollars it's the same in that, or the opposite in that, if the shit really hits the fan, we're going to get a situation where the Fed's going to cut. So therefore, the big surprises are to the upside. But you have to remember, back to your point about Eurodollar being also a credit instrument. And if we go back to 2008, you had a situation where you had LIBOR actually going the opposite way of the Fed funds rate, because
Sure.
right. So I have a question for you. Over time, what does the skew usually look like in the Eurodollar market? Is there a skew to the upside? Is that natural and it just was unusual and then it got so extreme? Or is it actually usually more of just a regular smile?
No, it's more of a regular smile, and in the old days it was more towards puts for exactly the things that you were saying. There's a credit aspect, and, it was not... this has been an odd period of history where the rates have been so extraordinarily low, and you would think, as the Fed started to tighten the onset of 2015, even though the hikes weren't particularly aggressive, you would have thought that the bid would go to the puts, would you not? That it was more likely that the Fed would continue to hike, especially when you listen to the various Fed officials saying, hey, we've got full employment, we expect things to be better, we expect inflation to go up. The market, though, never really believed it. So
yeah, it's just a fascinating time. So, Alex, before, I see on your charts that you have a 530, you're talking about Treasury, yield curves. That's always one that's near and dear to my heart. Why don't you tell us what you're thinking on that, the 5-year Treasury yield spread?
Well, I listened to one of your previous messages or podcasts, and you were talking about how you trade the 5s to 30s and how you need to worry about the DV01 on the contract, and you need to do a ratio in order to replicate this spread, and that's true in the futures markets, of course. What I did here is I showed the 530, also the 2s, 10s, and then also in the Eurodollars, the red pack to the gold pack. The red pack is the second year forward, and the gold pack is the 5th year forward.
So why don't you explain, 1 second, I'm sorry to interrupt, Alex.
Sure.
Why don't you explain to people that when they talk about packs and different colors, what they mean? Because I know me, sometimes you guys take for granted that everyone knows red, gold, what that means. But no problem. It's all right. So just why don't you give us a little bit of a lesson in terms of what the different colors mean and how they work and what you're talking about when you say that.
So the first 4 contracts are known as the whites or the fronts. And they are, if you just take the average of the first 4 contracts, you trade them as a pack, 4 contracts at a time, and you create a 1-year synthetic instrument. You can trade individuals or you can trade them as a pack. The reds are the second 4 contracts out. So that is a 1-year forward if you trade them as a pack. The greens are the 3rd year out. And it's the same thing. It's a 1-year pack or a 1-year period, 2 years forward. So it starts whites, reds, greens, blues, golds, and then goes another 5 years out. But for all practical purposes, it's really the first 5 years that trade pretty heavily. So the sort of fulcrum of the curve has always been the 4th, 5th, and 6th contracts, kind of relating to the 2-year Treasury. Those yields are very well correlated. When you go out a little bit, what I tend to watch is the reds to golds, the 2nd year forward to the 5th year forward. And the idea there is that that sort of replicates 2s, 10s. And you can see on this chart, especially recently, it doesn't really replicate 5s, 30s, but it does, does correlate fairly well to 2s, 10s. And for the ordinary trader, it's actually easier to just pick a contract in the reds, like the 5th contract, and trade it versus one of the blues or the first gold, which would be the 17th contract. And so you just do one contract to one contract. It's a little bit easier to manage than doing a ratio in the futures between 2s and 30s.
That's right.
Where you also have to worry about what the cheapest to deliver is. Go ahead.
Right.
I'm sorry.
And the no problem. And the reason I just want to explain to people is that Eurodollars trade based upon yield. So it's actually, although it's a price, the way that it's calculated is it's 100 minus the yield of that contract.
100 minus the price of that contract is the yield. That's exactly right.
Yeah, I'm sorry. You're sorry. And so when you're trading a futures, you actually have to figure, like when you're trading a treasury kind of future, you actually have to figure out the proper ratio. And that's what you're saying is that you can do 1 for 1. So if you wanted to say that like the 2nd versus the 5th year like that yield spread was going to widen, it's much easier to do it in the Eurodollar market because basically you just pick 2 contracts and trade 1 for 1, as opposed to if you wanted to do 2 5s or 2 10s, you have to figure out the proper ratio to make
Correct.
sure that you have the same. So that is something great to know in terms of what do you think about the 5s, 30s, and do you think that this is it? I see in your chart that you noted that it never went negative.
It never went negative, but the thing is that what's particularly interesting right at this period, right now, is that the 5s 30 spread has tended to steepen throughout this year, and when we had the employment data, it flattened quite a bit. The spread came in about 8 or 10 basis points, but then it immediately, with Powell's testimony, popped right back out. The inflation data was a little bit stronger, but you have Powell indicating, "Hey, we're gonna be easing." So it's really a classic setup for the curve to steepen quite a bit, and 5s 30s is definitely leading the way here. I think it could get to 150 basis points pretty easily.
There we go. Music to my ears. Well, Alex, it's great. I really appreciate that. All that lesson and all that talk about Eurodollars. Let's go on to the tales from the trading desk. You've sat on a trading floor for a long time. I'm sure you probably have some good stories. Would you mind sharing one with us?
Well, the story that I'm going to talk about, I guess, is one that actually has to do with yield curve trading at the Board of Trade. When I first walked onto the Board of Trade floor, this is before turnstiles. It's before key cards. There was just a security guard at a desk, and you walk onto the trading floor. And I had worked as a runner, and then I worked as a clerk, and I was working as a clerk for Manufacturers Hanover. And somebody says to me, that somebody and I was at a desk which was maybe 20 feet away from the bond pit. And at that time, the bond pit was the big daddy pit of the world. It was the sizes at that time that traded weren't anything near what they trade now, but the money that flowed through at that time was pretty extraordinary, even so. And so I'm at a desk, and I'm working for Manufacturers Hanover, a New York bank, which is long defunct at this point. And somebody says, well, one of these bond locals blew up. He, lost a ton of money, and he was going to be out of the business. And I was working for a woman, and she says, well, why doesn't the guy just borrow $50,000 from Ray? And I said to myself, what is this? Who in the world just lend somebody or ask somebody for $50,000 to borrow because they lost it so that I can keep trading? And I'm thinking, I've never even heard of anything like that before. So I'm thinking, who is this guy Ray? I've got to see him. Well, do you know who it is?
No, I don't. I'm
okay. Okay. So this is what's going through my mind because remember, I had walked onto the floor as a runner. I barely knew what a bond was at this time. So it turns out that this guy, Ray, was a fabulous yield curve trader and one of really the first at that time that traded all the Board of Trade contracts, the 5-year, the 10-year, the 30-year, traded them one against the other and knew all, of course, the dollar value of a basis point math, et cetera. So I say, well, I'd really like to see this guy. And somebody says, well, that's Ray there. And I see this guy walking past me, in the aisle of the floor, and he's got, looks like he hasn't had a shower in about, a month. He's got long, stringy hair. He's kind of walking along in this black coat with pink sleeves, and that doesn't look like it's been cleaned in a month. And this is the guy who was, he's worth, at that time, a tremendous amount of money. And to this day, he's what I heard about this guy, and I won't use his last name, is that, this is at a time when technology wasn't like it is now. But in the old days, he actually had a projector with live prices that projected onto the ceiling of his bedroom so that when he was sleeping, if he woke up, he could see where the prices were.
That's awesome.
And you've got to imagine how much that cost because, this was a time when to put in a direct line to New York, for example, used to cost us $600 or $700 a month. The costs were a lot higher. Yeah, it was pretty amazing.
I just want to know if he's married because I don't know about you guys, but my wife would not be down with the quotes
Mrs.
on the
McIntosh
ceiling.
would not be impressed.
No, she would not be impressed about that.
Well, I'm almost hesitant to tell this story, and this is a rumor only. Take this one with a grain of salt. But I will tell it.
You have to now, Alex.
Somebody told me that this guy, and I believe it was this guy, it may not have been, was married, but told his wife that he was a clerk on the Board of Trade floor. So a clerk might make at that time $25,000 a year, where this guy was probably making $25,000 in about, on a given trade. And so that's what he told his wife, and when she found out what his real business was, they instantly got a divorce and she got half.
She's no dummy.
Yeah, I guess so. Now, I don't know if that's true,
funny.
But that's what I heard.
You know what? You never let the truth get in the way of a good story, Alex. That's what I say. Okay, so that's great. Thanks for sharing that with us. For people that want to find out more about you, first of all, I just want to say I love your blog. I love reading about it. It is terrific stuff. It's my go-to place when I want to learn about short-term interest rates. And that's what you guys call yourselves, STIR traders, right? Short-term interest rates traders. And I would highly recommend everyone. So why don't you tell people where they can find you on both your blog and on Twitter?
Well, I don't really use Twitter that much.
Oh, that's right. You're not a Twitter guy. That's right. Sorry.
That's right. I specifically use this blog, and I specifically try to write something short that somebody can read within a couple of minutes and put it out first thing in the morning, so that they don't have to wade through a lot. So I assume a certain amount of knowledge, and that's at chartpoint.com. You can also find me. My email address is amanzara@rjobrien.com. So that is another way people could contact me if they wanted to.
Terrific. Thank you very much. It's been a pleasure having you on. We really appreciate it, and that's a terrific story.
Thank you.
Thanks, Alex.
Sure.
So, Kev, let's talk about this week in trading history. And so normally I come up with an elaborate story, but I think you actually read the book Liar's Poker.
You didn't read it? Well, I know there's no there's no picture version for you.
Yeah, no picture.
No, there's an audio book. But
okay, well then I have no excuse. I have no excuse. But nonetheless, we go back to this week in trading history, back to 1986, and that was actually when the big move happened, where Fannie Mae issued through Goldman Sachs the first issue of stripped mortgage-backed securities. So buyers could either buy the interest only or the principal only part of the bonds, and obviously this led to a gong show period in bonds, didn't it?
Yeah, you're right, because it basically let all the degenerate gamblers that just wanted to lever up bets, either long or short bonds, do it even more. Because if you think about it, a mortgage-backed securities, when rates go down, nobody will go and, everyone will go and try to refinance their house. And when rates go up, it's the exact opposite. Nobody wants to go and refinance at a higher rate. So if you think about it, the principal only part of it comes back to you at the time when you least want it, when interest rates are going down. Mm-hmm. And so if you kind of separate these two parts, the interest only and the principal only, one of them is a huge bond bull move bet, and the other one is a bond bear bet. And so this happened in '86. They allowed this they separated these two pieces, and then the guys at Salomon Brothers went crazy trading these things, and it ended up being one of the best stories in Liar's Poker. And I'm actually shocked that you haven't read it, Patrick. Like you honest to God, you're not shitting me on this. Like you haven't read Liar's Poker?
You know what? I feel shame. You know what? I'm gonna go pick it up right away. Like it is. Well, I feel shame.
It's probably the best Wall Street book there is.
They're really.
And it's that good. And so Michael Lewis talks about Howie Rubin, who is a 36-year-old mortgage trader, and he lost the most amount that had ever been lost on these securities. He did. And then the best part about it is that
how old was he? Did you say
36 years old.
Poor guy.
And they just listen. That was just poor guy. He's probably one of the best paid guys on Wall Street ever. But he then got hired at Merrill Lynch afterwards. Okay, sorry, I'm actually reading this and I'm realizing that he actually might have been at Merrill Lynch at the time. But anyways, I want to read you this part because it makes me laugh. He says a Merrill Lynch executive told the Wall Street Journal that Rubin just put the bonds in his drawer. We didn't even know he owned them. Just putting them in his drawer. Could the management of a leading firm like Merrill Lynch be caught so entirely off guard? Yeah, so he wasn't at Salomon Brothers. He was actually at Merrill Lynch. And I believe he was the big competitor to Salomon Brothers, was the Merrill Lynch trader. Okay, but then the funniest thing about it was that for the longest time
just put it in his desk.
Yeah, just put it in your drawer. And so they would always joke, and from then on, they would always tell the management to make sure you go check Howie's drawers. And Patrick, we're talking about this, but this happened in Canada as well.
Yeah. We shared it like half a year ago, I think, the story. But
I think we did. That's right. There was a very famous trader at a specific bank that did the same. He was long Nortel and CMAX Securities, a name, a blast from the past, and he did the same. He just put it in his drawer. But my favorite part is the trader that came afterwards would always go and say, he would write up fake tickets afterwards, the guy who replaced him, and said, look, I found another one of Stewie's trades. Anyways, IOPOs, I know that in this day and age of fancy derivatives, there's not much need for them, but back then they were definitely something that enabled traders on Wall Street to take huge bets on bonds, and it was pretty exciting times in '86 to be able to bet so easily long or short the bond market. And look back at it, make sure you go read Liar's Poker, best book on Wall Street that's ever been written.
All right, well, listen, I'll tell you what. In a week or two, I want you to call me out if I didn't read it by then. I'm going to go and pick this up, and you can shame me if I haven't done it by a couple weeks.
You can give us a book review, Patrick.
Oh, damn it. All right. That's now you're putting a lot of pressure on me. All right. Anyway, let's go on. Let's do the WTF clip of the week. And, you put together another good one. Why don't you give us the little intro on it?
Well, we have Rubenstein from, I believe he's from the Carlyle Group, isn't he? Let me just see here. Rubenstein. And he was talking about the economy, and he was going on about when he worked in the Carter administration. So he's a little bit old, this guy. He actually looks good considering that he worked in the Carter administration. But he was talking about how back then they wouldn't use the R word. So he came up with another word for it. So anyways, let's play the tape.
All right.
And I don't like to use the R word. Some of you may have heard me say, when I worked in the White House for President Carter, his inflation advisor, Fred Kahn, used to say, well, we're heading into a recession, perhaps. And
hey, do you want to go play skee ball?
Oh, boy. Well, this is the cash drawer. My dad's going to come by at the end of the weekend, and the number of bananas has to match the amount of money in here.
Oh, so it all has to even out?
Exactly.
Easy. Banana. Buck. Banana. Take a buck.
And Carter hauled him into the Oval Office and said, look, I'm running for re-election. Don't say we're going into a recession. It scares the voters.
Well, now that we've got an employee, we could go have dinner. We throw away a banana for every buck we take so no one finds out.
Man, I think you should do that math again.
Why? Is it wrong?
It's fine. He's a narcissist, not an embezzler.
And so Fred said, well, what am I supposed to do? I got to be honest. He said, be honest, but don't use the R word. From then on, Fred Kahn said, I think we're heading into a banana.
We're going to find some money for the family.
There's always money in a banana stand.
We don't have the money, Pop.
There's always money in the banana stand.
And he used the banana word because headline writers wouldn't say Carter's inflation advisor thinks we're heading into a banana.
And so Michael, his son, and his brother together enjoyed the cathartic burning of the banana stand.
But so I wouldn't say we're heading into a banana, but I would say there's going to be some slowdown, and there is already evidence that I think the trade dispute with China is slowing the Chinese economy a bit, slowing the Asian economy a bit, and slowing our economy a bit. And we will not grow as well in the second half of this year as I think we're going to grow in the first half of this year.
There was money in that banana stand.
Well, it's all gone now, Dad.
There was $250,000 lining the walls of the banana stand.
Why didn't you tell me that?
How much clearer can I say? There's always money in the banana stand! No touch! No touch!
So he's not allowed to use the R word, so he called it banana. So when I heard him talking about bananas, like, you know, there's the tried and true classic has got to be Arrested Development with the banana stand.
It was.
And
especially the accounting for skimming the till.
Yeah, I know. Maybe with her idea that as long as she throws away a banana, she can take $1 out of the till. And how would George Michael when he realizes, wait, that doesn't work? And then he says he's an arsonist, not an embezzler. Anyway, it's just classic. Probably one of the best comedies out there is Arrested Development. The new ones weren't as good, but that stage when they were still on Fox, and there was a couple of seasons there that are right up there and deserve to be kind of, you know, in the upper echelon of top comedies of all time.
All right. Well, so from now on, we're not allowed to say the R word. We're going to.
We have to say banana.
Yeah, for the rest of the show, whenever we want to say the word recession, we have to say banana. Otherwise, if one of us accidentally says the word from this point on, you owe the other person a beer. How's that?
Okay, done.
All right. So let's go on. All right, so let's move on to the top 5 things to watch next week. And so before we do, though, we have to review last week, right? And so the first thing, Nat Gas, just a quick review of what's going on. I mean, overall, it actually has been holding up, eh? Well, let me just.
I like it. I continue to like it. I think it's one of these things nobody's talking about. It's trading pretty well. It is volatile. Like, listen, it's a crazy.
I mean, it's always volatile.
As optionseller.com guy knows.
He certainly does.
That's right.
But what's interesting, just as a technical observation, is that you've got trend lines and major support resistance levels all converging. that previous low is like an overhead resistance on the high. You have this descending trend line along the highs that are all kind of, you can connect downwards. The point is that while it's nice that it's been improving, really the technical breakout confirmation is a clear above 250, and so that's right. Definitely what I would be looking for early next week. So that's still something that our listeners can be watching for. So
whoa, Patrick. So you're telling me if it goes up, you're going to buy it?
I already own some, but
do you?
But I might buy more. Yeah, absolutely.
Okay.
When it's confirmed, why not?
Okay, fair enough. I like that answer better. Let's go.
All right. So number 4, European yields. It was interesting. What was that story? 14 junk bonds now have negative yields in Europe.
Yeah, I don't know. Everyone. I can't tell you. People talk about the junk bonds, or they talk about the fact that Greece is borrowing under the U.S., or it's like yada yada yada. It's all these stories to make clickbait headlines. It doesn't really help you make any money, though, does it?
No, but I mean, you did call the turn at minus 40 basis points on the Bund.
Well, even the blind squirrel finds an acorn every now and then.
Yeah, I know. But I mean, listen, I'm going to give you kudos. That was a great call. I mean,
well, thank you. Again, Lena, please timestamp this, and we'll put that into the record. I think that's 2 now.
Yeah, you did mention that was one of your larger positions, is it not?
Actually, I still like it, and I don't know. We didn't talk about it too much, but I continue to believe the Lagarde might be the change in attitude that we're looking for, and that we're finally going to see a difference, and that we're not going to try to solve everything with more and more extreme monetarism, and we're going to maybe finally, run
bullshit.
I thought you were actually okay. Well, anyways,
all right.
That's what I think. I know that there's all sorts of legal reasons for it, but I'm always surprised at the way politicians find ways around the rules. And I continue to believe that if they do that, it's going to be the trade of the century. And not only that, Patrick, it doesn't even matter if they're going to do it or not. If the market thinks there's a possibility of them doing it, it is going to reprice. So that is what I think is going on right now, that there's more people coming around in my camp to acknowledging that there is a chance that this is as a turning point.
The one thing I'll tell you, that was the yields going down that low. That was such an oversold condition, or overbought from the bond perspective, that it was totally asymmetric in your favor. Like, I mean, maybe it could have gone like to minus 45, but you know what? I completely think that you were on the ball there. Where I don't think you're on the ball, though, is your Deutsche Bank call, right? So, like, literally, we talked about it when it was gapping up based upon this idea that this restructurings are happening, and it gave it all back right away. Like, just
that,
like
actually,
you.
Now that I'm looking at it, that is a classic prairie dog.
Yeah, no, it's the pop is buy rumor, sell news kind of.
He looked at, like they went and had a look and he decided to pop back into his hole. Nobody's business.
Yeah, and
okay, I'll tell you what, Patrick. I think Deutsche Bank heads higher from here. I think the next 25% is up, not down.
25. Before we were talking about the next 10%. No, actually, no. We were talking next $5 back then when we made the bet at $10.
Okay. So what's 25? So 7.5.
So let's
times
next
25.
let's just say the next 2. It's at 7. Let's use the 7.5 pivot. Is it $10 before it's 5?
Okay, done. Okay, let's do a real one this time. Let's do a stake.
Oh my God. As soon as
trade.
you feel the odds in your favor, you're like, okay,
the
fine.
Odds forever
you know what?
Screw
this. Steak dinner it is. I'm done.
I'm not talking keg steak. I'm talking good steak.
Done. I'm
okay.
in. I'm in.
And the bet will continue till one of us wins. No time constraint.
No time constraint. It's
it's a
10
tick.
or 5.
And it's just a tick.
If it prints even on an intraday basis above 10 or below 5, or to touch 5 or 10.
I'm going to win because the euro is going to go to 125 or 130 anyways, and it's just going to, even if it just stays the same.
So by the way, first of all, we're using the NYSE price.
We're using
Okay, so
it's
so
official NYSE price. Okay, we're done. Let's go on.
All right. So the then we have central banks. Obviously, Powell was testifying.
Yeah,
right?
and he basically confirmed, I
Well, at least the
thought
market
that he,
market took it
no,
that
he
way.
confirmed. He confirmed that July he was going to cut.
No matter how strong the economic data keeps coming in, things are definitely getting worse.
Well, do you disagree?
We're heading toward a banana. We're heading toward
but do you disagree that he confirmed that?
No, I
that
don't disagree, but I'm just simply it's like if you look at just the data coming in the U.S., it's like it's getting stronger. Like how do you connect it anyway?
I'm not trying to say what he's doing.
He definitely advertised that. I mean, the market is now fully pricing that in. They're pricing in 25 basis points July. Right?
I've been saying for a while it's going to be one and done. I can still think that. You guys have tried to scare him into 4 or whatever, and he's going to do one and done. Anyways, let's go on to number 1, U.S. inflation rates.
It came in a little hotter.
A little hotter?
a tick up, a tick down. It's just a rounding
error. I'm going to like this when I win this bet from you.
You are.
This is going to be great. Like, because you seem to think that there's no inflation out there, and like I don't know what you're living. When I go buy stuff, I see inflation everywhere.
Oh,
I'm like that dead kid not dead kid. Like I'm like that kid in Sixth Sense.
Yeah.
Instead of seeing dead people, I see inflation
everywhere. Yeah. My condolences too.
So you're going to be around, eating your deflation, and I'm going to be like, I don't know how you're paying for your deflation because the reality is that everything I pay for goes up in price.
Well, I just hope that steak dinner doesn't keep inflating on me before I have to pay up. Okay. All right, let's go on to top 5 things to watch next week. And so number 5, I wanted to touch on bond yields. Now, listen. Obviously, I'm going to Chicago, and I'm going to argue bullish bonds. But there is no denying that bonds were overdone on the short term. And I was on the sideline looking for a pullback to buy dips on. And here, we finally have the kick, right? And so this is the 10-year Treasury yield. We went, I think the bottom was like 195. We went to about 211, so about 15. Basically a 15 basis point swing. So
I'd listen. The bond bears should not take any solace. Like we're still licking wounds, and by no means is this a victory.
Look,
you're absolutely correct. We were so overbought, really, until we get back up to 250, where you can't even consider this anything more than a correction in your.
I think we can even see 2.25. I think we could see 2.25, even 2.30. That is actually.
Well, I think we could see a lot more than that. I just don't think that at 2.25, I think you're still going to be correct in that the bonds have been.
I'd probably be a buyer 2.25.
Okay,
bonds.
Well there you go.
Right, we'll see when it gets there, but it's finally underway. So number 4, I wanted to talk about Goldman Sachs. Now the earnings are next week as well. But
it's a big breakout, right?
Yeah. So when you look at this chart, and the thing is that I think these investment banks, like Morgan Stanley, is just trading like shit too. But these investment banks, I think that they're a bit of a tell. And if the market is going to do some bullish move to 3,200 or something like this on the upside of the S&P or even more, you have to think these investment banks should participate. And so this breakout is interesting because to me it kind of supports this idea that maybe there could be some short-term upside on the stock market. But I'll tell you that earnings next week is going to be a thing. Like what if it's one of those where the market realizes that Goldman's not done selling, and then they just hammer it after the earnings, and we're back down below 200. I mean, this is definitely something to watch next week. Do you have a bias?
Yeah, I hate it, as much as I hate to say this, I think that's a clean breakout, and I would go with it. I'm not going to fade this. I'm a buyer of this. I think
you know what? I acknowledge that it is a clean technical breakout, but I want to see what happens on its earnings before I make my stance on this. Anyway, watching Goldman Sachs, I think it's worth watching. Keep it on your radar, everyone. So number 3, Kev, this was yours. China numbers.
There's a whole slew of them. And, I know there's a lot of China bears out there, and it'll be interesting to see if the numbers continue to disappoint, because so far they have, right? And there's no doubt that when you look at the commodities are showing no signs of bouncing. And as much as the stock market's doing okay and hanging in there, there's not much to get excited about in terms of some other kind of, technical parts of the market. And I would really like to see some China numbers that maybe... I know they're made up anyways, but it'd make me feel better if they made up some good ones.
All right, so let's move on. Number 2, we have retail sales, and while we have U.S. retail sales coming out next week, those retail sales are actually coming out in a whole slew of different countries. So Canadian retail sales out in England, they have the retail sales coming out. So it's a retail sales kind of week. And so far, the economic data coming from the U.S. in the last wave has been stronger. So I'm curious whether retail sales will continue to support that trend. What's your thinking?
Well, the economic news has been better because you guys, all you economic bears, had gotten the so much pessimism built into the market that it was hard not
that is pretty much pricing in the banana already, right?
Yeah, that's right. So the reality is, if the banana doesn't happen right like today, then all of a sudden, whoops, we beat expectations. I'm not. I still think that things are not going that great, but that versus what you guys have priced in, it's going to be better than expected, and it will continue. So I suspect that you will continue to find that the numbers are tepid but beating expectations.
All right.
Except for inflation, which will just be blowing the socks off of everything.
Jesus Christ. All right. Number 1, earnings. And so for me, obviously, we have an earnings season coming up, and it's all firing up here. And in my mind, one of the most interesting things to contradict your play is whether or not the earnings disappoint, because earnings growth, an earnings recession, which is 2 quarters of year-over-year declines in earnings, right? May very well emerge if the earnings disappoint. And I think I don't know whether Rosenberg changed his tune or not. You can maybe confirm, because I don't know.
No, he's still staying on there. He's still
so it's
bearish rosy.
Yeah, but I mean, his view is though that this isn't going to be a consumer recession. Oh, damn it! I owe you a beer, a consumer banana, and but rather that this was going to end up being. That this was going to be more of an earnings banana.
Yeah.
Right.
Listen, did you see the cover of The Economist today or yesterday?
No. What was it?
Oh, go put it up.
Oh my God.
I'll read you the headline. July 13th edition. America's expansion is now the longest on record.
Oh yeah.
And the cover says riding high. And it says, what could bring down the American economy? Now, some people have argued that they're actually questioning what could bring it down, so therefore it's not a real bullish argument, like it's not the true magazine cover. I think that these magazine guys have smartened up to the fact that they shouldn't come out and be bullish at the top, but I implicit in this to me is still a bullish kind of bent. And here's what I contend, Patrick. We've had now 9 years of American stocks being by far and away the best performing stocks out there. Okay. Not even close. Like they've doubled or tripled the performance of the world, of the MSCI World Index. Okay.
Thank you, Europe.
I think that especially Europe. I think that we're about to embark on the rest of the world catching up. So I am not like a huge...
Oh, my God. That's the exact opposite of what you've been arguing with Brent Johnson, which is
I never said that. No.
So so you're not in the Brent Johnson camp? You're not in the camp that the milkshake is going to drive the U.S. equity market?
I was never a milkshake guy. I was
No,
never like, I like Brent and his milkshakes and stuff, but I was never in his camp that we're going to get this. And as you know, I have become less bullish on the U.S. market as all of a sudden all the technicians start telling me that we're about to break away. By the way, like, let's review here. I think it was a week ago that Novogratz was telling us all how good the chart formation was on the S&P, right?
Right.
And can you pull up the S&P? I don't think it's taken off by any means, and it's kind of.
But it hasn't. But it hasn't broken down either, right? So
no, I agree with you there. But I just think that, to me, it's symptomatic of the fact that whereas before, when I was bullish,
come on, it's
before,
continued to rip,
Patrick,
dude.
you well, it's been higher, but the reality is that you guys were all making fun of me, the whole way up, consistently making fun of me. And now, all of a sudden, now that we're hitting new highs, people are getting bullish. Like, what?
And they're getting mad at you for jumping off the bandwagon.
Yeah. I'm like, what? So you're getting mad because I like to buy low and sell high?
No, you just love the pain of everyone shitting on you. So you basically you're incredibly uncomfortable in a room where everyone's agreeing with you. Yeah, and so the moment that is like, I gotta say something that's like controversial.
No, I don't. I have no desire to say something controversial. I just don't want to be like, I'm like that. What is it? Who was it that said I don't want to be in a club that admits me as a member? That's how I kind of feel. That if all of a sudden everyone's agreeing with me, I must be wrong.
Yeah.
But no, come on, Patrick. You have to
all
admit
right.
that.
Anyway, so
going back to my idea though. I think that we're going to look back at this Economist cover and say this was the end of the kind of golden period of U.S. equities versus the rest of the world. And that doesn't mean I'm bearish. It doesn't mean I'm like you, that I think the world's ending and that we're going to, collapse into a deflationary mess and that you better buy your guns and ammo. But I do believe that I would rather own other equities going forward than American, because I think that American stocks are no longer going to be the leaders in this next move higher.
All right. So going back to the point, though, of whether there's going to be an earnings banana.
I agree with you. My point is
just let me make my point though.
Yeah.
What is interesting is I like the analog of going back to 1990, which is that when the earnings recession was confirmed in 1990, because it wasn't a big consumer. Well, I guess there was a consumer recession. Oh, damn it! Consumer banana element to it.
Yeah, you're going to be paying for a lot of beers.
Oh my God! The best thing is to just fast forward the end of the show so that it doesn't cost me any more beers. Yeah. So the thing with this Goldman. With this chart, going back then, is that the market proceeded to rise after the earnings recession an extra like 10%. And it lasted another 3-4 months and then kicked in a solid 15 to 20% wipeout afterwards. But it first went up before it went down. And so it'd be curious whether your little theory of the S&P originally going higher into the summer continues to play out in spite of even if the earnings come out weak. And then it's something into the that fourth quarter, that ominous window that something scarier happens. Anyway, that's just my 2 cents.
Well, and I'm not going to disagree that we might see some bad earnings numbers, and I am by no means like a huge bull and think that things are growing great for companies, because they're not. And I think that we're somewhat expensive, and I think that if you're looking for value, you're not going to find it in the U.S. stock market. Go look somewhere else.
All right, Kev, it's time to leave our listeners with a parting word of wisdom. So what did you put together for everyone?
Well, although he wasn't a trader, his old man was, so I'm going to leave you with some words from JFK. He says, "The one unchangeable certainty is that nothing is unchangeable or certain." And that is the one thing, Patrick, I try to remember that. And if for all you guys that tell me that deflation is certain and that we're for sure going to go lower, I
accept that there's no certainties. I like probabilities, and I think you're probably wrong.
As our buddy Alex Gurevich told Brent Johnson, I think the chances of your trade working are 1%.
Oh, he's got a chance.
He's got a chance. So you're saying there's a chance. Dumb and Dumber. Okay. Well, listen, as we're summing up here, don't forget, everybody, July 21st.
Yes.
We're going to be at the Traders Expo. We're going to have the great Bon Bull Bear debate. And then after that, we are headed to the Public House, 400 North State Street. We're going to get there at 2 o'clock. We're going to probably stay till, 10, don't you think, Patrick?
Oh, my God.
Patrick might be going home at 6.
My liver is already shriveling from the thought. But anyway, yes, listen, long as our listeners are there, I'll stay.
Well, I'm going to stay regardless, even if there's no listeners, and I'm going to do it. I'm going to go I was listening to a podcast yesterday, Patrick, this is a good story, about Depeche Mode. And people don't realize this, but Depeche Mode was kind of like the Rolling Stones of the new wave generation. And one of the guys went to a bar, and guess how many, it was in Germany, guess how many beers he consumed?
20?
67.
What are the tiny little ones? Like, how the hell do you fit
I don't know. I think he was there for 3 days or something. I'm not sure. But these guys were just crazy. So we're going to try to do our best to keep them. Rolling Stones.
I'm not going to try to break
Depeche
that
Mode.
record.
Yeah. No, I know, because you'll have 3 and you'll be done. Okay, but everyone, please make sure you come join us. It'll be a lot of fun. July 21st, Public House, 2 p.m. till probably 10 or 11. Come on by. And in the meantime, Patrick, where can they find you?
You can follow me on Twitter at Patrick Ceresna, or you can visit my material stuff on bigpicturetrading.com. And Kev, where can they follow you?
At Kevin Muir, or subscribe to my newsletter at themacrotourist.com. And make sure you go to not the Market Huddle, just markethuddle.com, and make sure you sign up for the weekly email so you can get all the great charts and stuff. And rest assured, we'll never spam you. Thanks a lot to Alex. Thanks to Lena. And everyone have a great week. We'll see you next week. Okay, so now we're joined in the after hours by Alex, and we're going to talk about, we were just kind of shooting the shit about the fact that that the trading floor no longer exists, and I think you're upstairs and you don't actually trade on the floor anymore, but we were kind of reminiscing about how it used to be, and I was just wondering, how does it work now? Is there an actual floor, and do people, is there a place where locals can go and trade, or is it upstairs in offices? How does it work, Alex?
Well, there are no longer any futures contracts that trade on the floor. It's mostly just there are a couple, but it's mostly just the options pits. So in the old days, there was a pit where market makers, or what we would call locals, would be, along with filling brokers that executed orders from the outside world. In the old days, the outside world was this ring of booths that surrounded the pits, where we would take a phone call and then hand signal an order into the pit. And you can imagine in the pit, of course, it's open outcry, so there's a lot of yelling. It's loud. At this time, currently, of course, there's a Eurodollar option pit, but with technology, a lot of people wear headsets. A lot of people have small tablets where they have their pricing sheets. That used to be all done with paper. In terms of the market making groups, there's typically a market maker in a given group. There's typically 1 or 2 market makers in the pit, and there's an upstairs guy. And these guys are linked up with headsets. So the upstairs guy is in front of screens. He can trade the futures and do the delta hedges, etc. So there is a pit, but it's just nowhere near as large anymore.
So why does the pit even exist? I guess I'm a little confused about that part about it, because isn't it all electronic? Isn't every trade going to go into the machine, or are there still stuff that's
A long time ago, the markets in the pit, and this is even maybe a year and a half ago, were probably tighter and quicker than you could get on screen. So, for example, and this is especially true I mean, the Treasury options, not as much, but the Eurodollar options, there are options on all the different contracts. There are a lot of synthetic yield curve spreads that go through the Eurodollar options. There are a lot of three-way or strategy trades that go through. So, as an upstairs broker, if you say to me, oh, can you check the December at the money straddle versus this out of the money call? And I can check it on screen or I can call down to the pit. When I check it on the screen, I have to build it on the screen. And it takes a minute to do that. And then, a guy might say, well, where's the December 98 even straddle versus the 98.12 call? You build that. Then he says, where's the D straddle versus the 98.25 call? In the pit, you get almost an instantaneous answer. When you build it, takes a little bit longer. Now, of course, we have market makers on our Bloomberg chats that we ask for those things as well.
Okay.
But why would the pit, why would the pit continue to survive? It survives because it's really quite efficient and fast.
Just because they're quicker at coming up with those prices for you than you going in and asking for a quote, like putting it into their system. They already know
I have a system here, right? But I have to actually build, for obscure quotes, I have to build the strategy. Or if somebody says, well, where is this call versus a future here? Where is it versus this other future price? Can I change the delta? Takes a little bit of time. Doesn't take long, but the pit is very efficient for that.
And so who are these groups that are taking the other sides of this trades? Like who is you often, I love reading your blog. You'll talk about 50K of this, whatever, like straddle went up or, oftentimes it's even more complicated than just a straddle. It's, a four-legged blah, 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 blah. Who's taking the other side of that? Who are these groups that are, coming in and filling like when a PIMCO or other guys like a Gunlack comes in and wants to get these orders filled, like institutional size? Is it the Goldman Sachs of the world taking the other side, or is there specific
there are specific option market making groups? It might be Goldman's option making arm, or market making arm, but there are also I'll just throw one out, a firm called Optiver, which is a Dutch market making firm, and very well capitalized. And I think I had read in one of your blogs at one time in the Macro Tourist about this strategy of selling volatility, right? Well, of course, there are firms that are, large vol traders across markets, and so there are some very large ones. In the old days, it used to be a guy that had made a lot of money and backed a couple of other guys and had them in the pit. They weren't as well capitalized. Now there are some very well capitalized players in that space.
So are they institutions or are there still individuals like rich?
They're still individuals.
Okay.
Some of my friends are individuals that trade in there. Typically, they trade in groups. Typically, they're backed by some capital. There's very few guys. There are very few guys that go in with their own capital. There are some individuals that were backed by somebody else and got large enough to trade their own capital.
So when somebody comes in and asks for a 50 lot, like 50,000 of something, is that often like, half a dozen different groups selling it to them, like, and they come up with a price and it's done that way? Or is it often just one, two counterparties, a buyer and a seller?
Well, we have a facility called block trading, which is not on the floor where you call around for and indicate huge size. In that case, it would probably be one counterparty to another. When something like that is traded on the floor, and if it's a smaller delta thing, odds are you're going to be able to do 20 or 30 or 40,000 on the floor, especially if you feed it in a little bit. There's a lot of groups that will make 5,000 up markets. If it's a 40,000 lot order and it's hitting the pit, it's probably going to go to 10 different groups on the other side.
Oh, okay. So it'll be divided up. So that's often what's
Divided
happening.
up, right.
And so that's a block trade that they've done
So
upstairs.
in the
they just
pit,
take
it's
it
not
down.
a block trade. Upstairs, off floor, you can call around and get a market, right?
Right. Okay. And that's how that's done. Now,
Sure.
what other changes have you seen in that whole future square over the last, because you have a unique perspective that you've sat there, you've been down there for a long time. You obviously went in when you were just young, and you've kind of watched things change. Like, what other things have you noticed in terms of futures trading and how it's changed?
Well, the technology is, these screen markets now are just tremendously large. And of course, when I came on, there were no screen markets of any sort. The costs of technology went way down. Commission rates have come way down. All the telecommunications, we didn't have, when I started, there were no computers on the floor. Now everybody's phone has more computing power than we ever had. Initially, people used to keep charts by hand with paper and chart graph paper. But I would say that some of the strategies. Well, I will give you this one other little example. A lot of the Eurodollar market makers, what they would trade is butterflies or calendar spreads and butterflies. And what we call double butterflies. So you trade a butterfly against another butterfly, which is one contract versus two contracts of another versus a third contract, 1 by 2 by 1. That's a butterfly. It's a sort of a mini yield curve type of a trade. That's what all the market makers in the Eurodollars traded, and that's what built depth in the market at that time. So somebody had told me, well, Getco, which was a firm that started making markets in electronically, one of my friends said, you should go talk to these guys because they want to expand into Eurodollars, and they want they're looking for people that know what the markets are there. So I went over and talked to them, and they said, well, we can. I forget how many transactions that they said they could, that their systems could process within a minute. They said it wasn't all. They weren't all transactions. They didn't get dealt, but they could change their bids and offers and sizes very quickly, almost instantaneously. And I, at the time, didn't even really realize how powerful that was. It was just to get a chance at having a little bit of an edge. Now, the strategies still tend to be spreads and butterflies, but I didn't realize how the advancement in speed, how valuable that was. And
right, because
they
can get to the front. They can get to the front of the line to get on the bid. Is that what you're saying?
The front of the line, and also they can instantly change. If one thing is changing, they can change the size of their bid or offer. If they get hit on one little piece, they can change many other contract prices simultaneously. And if they get the other side and another contract, they can cancel all their other orders. So that is very powerful technology, and of course, it's gotten more and more powerful. I'll give you another little example. In the old days, in the back month Eurodollars, size and height was a large advantage because you wanted other people to be able to see you. So there would actually be guys that wore platform shoes with like 4-inch soles in order to get a little bit of... No, of course. Yes,
Saw pictures of that.
Absolutely the case. And so... Yeah, and the exchange actually had to put out a rule that they couldn't be above a certain height. So that was what the deal was at that time. I had read a thing a few years ago that Don Wilson, DRW, which is the guy's name is Don Wilson, the company is DRW. It's the same sort of a thing. It's that he wanted to build a a microwave tower high enough so that it would compensate for the curvature of the Earth. That's the size advantage that he was looking for.
Wow.
That's funny. Do you know what's funny? When you said the fact that the 4-inch platform shoes, it made me think of the French president Sarkozy. I don't know if you remember him, but yeah, the old French president, because Nicolas Sarkozy, he had.
Sarkozy, yes, of course, short guy.
Yeah, short guy that married a tall woman, and he goes and he wears those kind of 4-inch platform shoes. So he's been taking one out of the books of the CME traders.
That's right. That's right. Well, this is in the very old days in the Eurodollars in terms of real estate. There was a guy that supposedly was trying to sell his space, and his space in the pit was only about maybe 2 square feet for $1 million.
Come on.
And this was
he was trying to sell his spot that he had kind of staked out.
Yes, because people did stake out spots, and there were fights over spots, and those location was very, very valuable.
Wow, that's unbelievable. $1 million. Now, did he sell it or no?
The exchange frowned upon. I don't think that transaction ever went through, because the exchange, in those days, the members owned the exchange. They owned their seats, but the exchange didn't want it to be the case that somebody owned space on the floor.
It was a bad precedent to set.
Right.
Okay, I got a question for you, Alex. You told me you started at the Board of Trade, but you ended up at the Merc. Correct me if I'm wrong, but is it the Merc? They call them cars. They don't talk about contracts. They talk about cars.
And the Merc was always cars, right?
Yeah. And so, are you a car guy or a contracts?
No, always contracts for me.
you stay true to your CBOT roots, do you?
That's right. That's right. But the hand signals were a little bit different as well, so it wasn't easy to go back and forth.
I didn't know that.
Yeah,
I didn't
slightly
realize
different. Yes. Because at the Board of Trade, if you sold 100, it was the same as doing 1,000 at the Mercantile Exchange.
Okay. Now, the other thing I got to ask you about is everyone talks about the joke about the O'Hare spread. What, the O'Hare spread?
Well, the Brazilian is sort of the Brazilian trade. You put on a big position, and if it works, you.
Yeah, that's right. So you go buy 1,000 lot or a 5,000 lot, and if it works, you as a local, you just kind of flatten it and take the money, and if it doesn't work, you're off to Brazil. I guess you guys called it was that what it was called, the Brazilian spread?
They made a rule against that, and it was called taking a shot. And if they didn't think you had the wherewithal to support the position that you were putting on in front of a big data release, for example, and it was a big winner, you didn't get to keep that money.
Oh,
they actually instituted a rule called taking a shot.
Oh, okay. Well, there you go. And did people lose their money? Did people did anybody that ever occur when someone put on a big position that they shouldn't have, and then that worked for them and they didn't get to keep it?
I've never heard of that specifically, but I heard of a guy, but I did hear of issues like that. So
the guys were trading too big, and then they shouldn't have been allowed to do it, and they weren't allowed to keep the proceeds.
Well, a long time ago, there was a situation at the Board of Trade. Again, this is before turnstiles and key cards, where some guys came in and they created fake orders. So they had somebody had an account, and so they had a clearing account. But if I walked into the Board of Trade floor and I was wearing, let's say, a manufacturer's jacket, and I handed an order to a pit clerk, who in turn gave it to the broker in the pit, and he filled it, even though that clerk might not know me, I was on the floor handing them a legitimate order. They just fill it. So what these guys were doing is they were starting to fill small orders, and if they were winners, they would just turn the tickets in, which would go into the clearing system, and it would show up on their account. But if they were losers, they would just tear it up. And what does that create? That creates an out trade for the pit broker. Well, every day there were out trades. So they say, well, what's this 10 lot? How did this happen? Well, I had it into Manny Hanny. Well, where is the trade? Well, we don't know. Okay, cover it. Just we get out.
Yeah.
It's part of the business. So there were some large. These guys did this in terms of some large orders, and it caught some people.
Yeah, they ruined the game for everyone. Alex, I'll tell you one quick story that I used to sit on an institutional desk, and people would phone me up. So I'd be sitting there in Toronto, and someone would phone me up and go, "Hi, it's Bob from Oklahoma's Teachers Association. I need to buy $1 million of the equivalent of our SPYs, our spiders."
Right.
And I'd be like, "Hi, Bob, nice to meet you. It comes here," and you go, "Okay, bought from you," and we do a trade. And nowadays it takes weeks to set up accounts and all the compliance and stuff like that. But people don't understand that this is how it was. There was a lot of trust back then, and you didn't worry about kind of all the regulations. And I guess really, the September 11th changed things in terms of with all the know your client rules and stuff, and rightfully so. But it's just it was a different era when you could trade on a lot more trust, and it's unfortunate because it's nowhere near as much fun anymore.
No, that's for sure.
Yeah.
Anyways, so Alex, I'm going to let you go. It was a pleasure having you. Before we go, I'm just going to give everyone one last shout out. Make sure you go follow Alex on his blog. Why don't you tell us where it is, Alex?
And that's chartpoint.com.
And if you sorry, go ahead with your email. I don't mean to step all over you, Alex.
No. It's amanzara, AMANZARA @rjobrien.com.
Well, that's terrific. It's been a pleasure having you on. And Patrick, I just want to know,
thanks, Alex.
Patrick had to go out for a quick huddle puddle. Alex has agreed to come to our July 21st. He's going to come with the Market Huddle meetup at the Public House. So it'll be another person that if anyone wants to come and talk to Alex, you make sure you come. And I look forward to meeting you in person, Alex.
Yeah, it'd be my pleasure. I'm looking forward to it as well.
Okay. Well, thank you very much.
Thank you guys very much for having me on. Okay.
And make sure you guys go follow Alex on his blog if you have any interest in stir trading. That is the blog to watch. And it's been a pleasure having you. Take care.
Thanks, guys. Okay. Bye.
So what do you think of Love Fuzz?
I would rate this beer probably 9 out of 10.
Really?
Okay. So I don't know. I've been obsessed recently with Dave Portnoy's One Bite pizza reviews.
Okay.
I don't know if you guys have ever seen this, but
sounds like right up my alley.
I
saw it.
Yeah, I've been obsessed with it. I came upon it. I'm a loser because I'm basically late 40s and I'm just figuring this out now. But this fellow, he sold his company Barstool Sports, and he's gone. And when he sold it, they made him move from Boston to New York. So he's in New York, and he decides that he's going to go do reviews of every single pizza place in New York City.
My dream job.
Right.
Yeah. But I guess he doesn't want to get fat because he's doing one a day or whatever. So he does One Bite pizza reviews, which obviously he doesn't do One Bites. He's pretty funny. But as he would say, Lena, he says that is a rookie store. Like even numbers, we got to go we got to go like digits here.
Percentage.
Not percentage, but like digits. It's like figure skating. So what did you say? 9 out of 10? Is that what you said?
9 out of 10 for me.
Okay, now we're going to do Dave's rules, so you can't go back. But next time you should think about digits. So, Patrick, what are you thinking?
You know what? I'm going to, because this is the first time we're rating, I'm only going to give it an 8 out of 10 because I want...
Oh, my God, another rookie score. Another rookie score.
How was I supposed to say I wasn't paying
like
attention?
8.2 or something. Like you're just like you're not using enough precision, but it's too late.
Okay.
You said 8 out of 10.
7.9. I'm giving it a 7.9. I just gave it a 7.9. I just did.
I
just did. Nope. I gave it a 7.9.
Anyways,
and so
Patrick, tell us why you gave it the 8.
Well, first of all, it's a strong beer, 6%.
And it's not a sour.
And it's not a sour. It's but you know what? The thing is that I feel that while it's a delicious beer, and I certainly would have no objection to ever drinking this, I wouldn't have given it such a high score if I did. But I feel that from all the beers we've had, that in the future there's going to be beers that are going to be scoring higher. And if I go too high on this, then I'm going to have to be pressing like 9.1, 9.2s all the time. And I figure by starting at 7.9, this is a really good beer. So therefore, it's like a good benchmark for which I can now base of whether or not this beer is better than Love Fuzz.
I agree. I'm with you guys. I think it is also a really good beer. I didn't taste any of the pine or the blueberry.
It's a little too hoppy.
Just tasted like beer to me.
Yeah.
Oh, it was a little too hoppy. Okay.
Yeah, it's a 40
That's why I said 9 out of
IBU.
10.
How does the IBU work? Do you know that IBU
I don't-
scale?
I don't know.
It's
sounds like blood
it's
units or
Too many
something.
beers in, I don't know.
there's some sort of a scale. I guess I don't know what it is, but I think it's about the bitterness of the beer. And so this is a 40 IBU. I'm curious what other ones rate.
Okay, well, I'm going to go. I agree with both of your analysis. I don't think it's a 9. It's a good beer. I think it's slightly better than an 8. I'm going to go 8.1.
Maybe it's a good beer for millennials. Maybe that's why I gave it such a high
That's
rating.
true. That's true.
What
So what do you
was
guys-
your rating, Lee?
9 out of 10.
9 out of 10. It was a rookie score.
No, she said 9 spot 001.
That's right.
Okay.
We were just
well. We
rounding
don't
to
have
do
anything.
digits.
We don't have anything good and spicy to talk about this after hours, do we?
Other than that we like bananas.
That's all on you, Patrick. That's all on you.
How many times did I say the other?
I let
the
you
R
off
word?
because you were doing it so often. I just let one go. I let one slide.
So how many did you count?
There was 2 that you admitted to,
Yeah.
and there was probably 4.
4. I owe you 4 beers. Did Lena? Did he say the R word at any point?
Not that I can. Not that I.
Oh my
No.
God! I'm so bad at this.
Yeah.
Oh my God. You know what it is? It's because I had to actually do that one top 5, and it was I set a trap for myself.
Excuses.
Yeah, exactly. I'm with you, Lena. Lena, are you coming to Chicago with us or not?
Unfortunately, I am not.
Oh,
But
you got to do your.
I
You got to
I
do that
would
other
like,
job.
you know what I would like is have people that are attending the show to see you guys have the SmackDown, and people who would be joining you guys afterwards to record you guys on video if they can, and they should send it.
Oh, no,
I
don't
think
do that.
I think
You know
there's
what we can do?
actually-
We'll
I
do.
think
I'll
there's a
tell you what
web
we'll
stream
do. We're not gonna. Well, I don't know about that. I don't really care about the SmackDown, but I do care. We'll do beer reviews when we go through it.
Yeah, I think you should
We'll
do
rate
it
all
with
the beers that we
with
drink.
your, with the attendees for the afterwards to join you guys for beers, and then you guys should rate beers together.
You know what? We should get a bunch of our listeners that know of sponsors that want to sponsor our show down there to bring a bunch of beers. Since
You cannot bring beers to a bar, Patrick.
No, but the
God,
thing is
Another rookie mistake.
what I'm saying is that I could bring them back to TO.
Oh,
and
I see.
we'll-
Yeah,
and
yeah.
we'll
Okay,
feature-
fair
and
enough.
we'll feature
Yeah.
them on
Yeah,
the
yeah.
show.
If anyone wants to give us a few beers to drink while we're doing the show,
like
for
if
sure.
you
we'll-
know
You guys are gonna be
someone that
drinking at
wants
like
to sponsor
10:30 in the
show,
morning at the
because
expo?
because we obviously get access to only Canadian beers. And
That's
so-
true.
So if
That's
if-
a great
if-
idea, Patrick. That's a great idea.
If we can
now,
get a bunch
the real
of really
question
good
is,
Chicago
does it make
crap.
the trip back? Like I'm worried that you're gonna drink them all on the way back.
Is that so bad?
You bet. No, I'm just kidding.
No,
We'll
I-
make sure we do it.
All
Yeah,
right.
no, for
But that's
sure.
a-
A
that's not
Chicago
bad.
beer would be a great idea.
Yeah, we should.
Okay.
All right.
Well, listen, I am going. Listen, I'll just tell you what I'm doing. You're not going to get a hold of me on Monday or Tuesday, guys. I will be hiking in Lake Superior.
Oh.
So you're going for the weekend?
Yeah, we're driving up there, and we're going to be there till.
Are you going to the
Tuesday.
national park up there?
Yes, I'm going to. I don't know how to say it, Pukasawa or something like that. It's like in the middle of nowhere. I got no.
So like
no
it's
Wi-Fi.
a hiking slash like a camping trip, or you guys got a hotel there? Or
Are you guys glamping?
No, there's no hotels there, and I would just stay in a tent, but my wife does not like tents, so we're yurting it.
What? A
Yeah, I
yurt?
know.
You guys got a yurt?
Something like that.
Oh, wow.
Let's look this up.
Fancy.
You have a yurt? Yeah, those
Yeah.
things are huge.
Yeah, they're like mini
No,
houses that's made with tarp.
It's like a shed. It's basically like sleeping in a shed, guys.
Better than a tent.
Is it like you're gonna just pop it out of the back of your car?
No, it's not like I'm towing a yurt. They got him at the actual.
Oh, okay. So you're renting. Okay, you're renting a yurt. I was like,
You are glamping.
Like these are huge.
They're not glamping. Go look
If you
at
have a yurt in a park, in a provincial park, that's glamping. That's not shit in the woods.
I bet you have running water and flushing toilets
yeah,
too.
exactly.
No,
that's
not
glamping.
a chance. Yurt camping, Pukasawa. I'm going to pull this up here, and you guys are going to be so wrong. I'm going to send you pictures.
Yes, please
of
do.
This yurt that you think is going to be so glamping. Oh, actually, I can just see. Actually, I see the pictures are pretty nice. I might be wrong. I might not be sending any pictures. Because actually, you're right. It's not.
I've
fancy.
seen some pretty.
It's not like staying at the Four
glamorous
Seasons or anything like that. Like it's
no,
still
but
in
I've
the
seen
middle
some
of nowhere.
pretty glamorous yurts. Like
No,
they,
but
they.
Go look at where this place is. This place is in the middle of nowhere.
Does it have running water? Yes or no?
No, it does not. It does not, but it's a little better than a shed, I must say.
Is there a toilet in the yurt?
No, there is not a toilet inside.
Okay, so there's an outhouse.
Yeah, there is an outhouse, and then the bears will be there. But it's okay. I'm used to bears. I have to do one with a show every day.
Exactly.
I mean, I have to do a show with one every day.
Every week.
Yeah, every week. Yeah.
All
Feels
right.
like every day.
All right, let's wrap
Okay,
it
well,
up. Let's cut this off. I'm overdue at home.
Okay.
Anyway, it was good.
Have
It
a
was
great
good
week,
beer.
guys.
Yeah, have a great week,
Yeah.
everyone.
Next week, no rookie scores.
That's right.
Okay, take care.
Thanks.